So national insurance you will usually encounter whether you're an employee or if you're self-employed. If you're self-employed, you will usually pay Class 2 and Class 4 national insurance. However, in the latest autumn statement 2023, Class 2 national insurance has been abolished. So from the 6th of April 2024, you're not going to pay any Class 2 national insurance, which is great news if you're a sole trader or if you have profits from a partnership. Additionally, your Class 4 national insurance will be decreasing. That's going to be decreasing even earlier. That's going to be from January 2024. So Class 4 national insurance, that's calculated depending on your level of profits. You have a certain amount of profits free, then it kicks in for a certain level. And that's going to now reduce from 9% down to 8%. So that's quite a significant amount of tax, because quite honestly national insurance is a tax that you're going to be saved each year as a self-employed or if you're in a partnership. Additionally, some of you may have a mix. You might have self-employed profits and employment, because lots of entrepreneurs do have multiple sources of income, and certainly if you're running a business you're going to have employees generally. So your employees or yourself will see a reduction in your employee national insurance. Now currently that's called Class 1 national insurance, just to get the right name for it. So that currently is 12%. That will be decreasing by 2 whole percentage points and will be going down to 10% from the 6th of April 2024. So your employees' pay packets will see a nice change in your January payroll, because they should hopefully see more money going to them. So what you'll essentially see is your net wages number will increase. So you'll be paying more out to your staff, but the amount that you'll be paying across to HMRC for the national insurance will decrease. So overall, as an employer, nothing changes. You've still got the same bill. It's just changes of who's getting what. So what, as an employer, the important thing to think about is that your employees will be receiving slightly more. So hopefully that will offset a bit from the current cost of living crisis. So you may be able to keep your same pay rises that you were going to do anyway, and they're going to be even more delighted. Or if you haven't issued them yet, you may shave them off. I'm not suggesting that you should do. It's obviously up to you. Because quite honestly, your employees, what they really care about is what they actually receive into the bank account each week or month or every 2 weeks, depending on how often your payroll is run. One final thing, we normally recommend if you run your business as a limited company, that you receive a small salary and the rest in dividends. Now that is relevant for a lot of small businesses. A lot of larger businesses or medium businesses who are working with really big profits and they take large amounts out, it actually works out cheaper, holistically looking, to be paid all in salary. So those of you that are actually receiving, that is going to be some savings for you because of the Class 1 national insurance decreasing.